Alright guys, welcome back to the channel. So today is episode 95 and today we're going to talk about the fact that Shopify stock got crushed. Alright, so after earnings, Shopify pretty much came out with the numbers, and as far as the EPS, it was a beat. It was, Wall Street was expecting 17 cents per share. They reported 20 cents. The problem was with the forecast, and they forecast based on some investment in cost that their margins will get smaller, and Wall Street was not trying to hear that. So the stock just, it did the electric slide. So right now we have Shopify pulled up on the screen, and the first thing you can see here, it says this stock has recently experienced elevated volatility, which just means that, there's a lot of stuff going on. Possibly it's being frozen, released, frozen, but it's highly volatile at this point. So on the weekly, we could see here somewhere around, I would say May 2nd, we're in the low 70s, right? 72, boom, 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 and creeps up here, gets up to 74 on the 3rd. So that was last Friday. Boom, 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 boom. And then the 6th, Monday, just started to shoot up because it was expected to report earnings yesterday. So just started shooting up. Boom, 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 boom. The 6th, it's at 77. The 7th, it's just going up, going up. Boom. 9 p.m. on the 7th, it got as high as 78.49. Boom, 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 came down. And then on the 8th in the morning, when it was, before it reported earnings, 78.62 was the highest point. And then when 7 o'clock hit, and I guess they started the earnings, it just fell off a cliff. Boom. If you look at it here, by the time the market opened, it dropped all the way down to, what is this? 61.86. And this was at 10 a.m. on May 8th. So yesterday at 10 a.m., pretty much when the market opened, it just started selling off. From here to here, it was like a huge, huge drop. So if you had got in and you had gambled that it would have gone down, you'd have made a ton of money, because from here to here, that's a massive move. What is that? 78 to 62? That's a lot of money, man. You know what I'm saying? So it just came down, hit up here, and it's been kind of just consolidating ever since. This is today, 10 a.m. It had 9 a.m. It had a little spike, got up to 63. Boom, it just went back down, and it's been consolidating ever since. Today is the 9th, and I'm doing this video like around 3:30. I've done pretty much my trading for the day, so I figured I would jump into this because I know a lot of people are concerned. So pretty much in a nutshell, what happened with Shopify is, like I said, they beat on the EPS. Wall Street expected 17 cents. They reported 20 cents. But as far as guidance, apparently they did some spending to try and make the business better. And whatever spending they did, it pretty much reduced the margins, meaning the amount of profit that they were expecting, now it's going to be reduced. And that's for the forecast. And Wall Street wasn't trying to hear that. So let's go ahead now and hop into TradingView, and we'll look at some key levels for Shopify. All right, so here we have Shopify pulled up on the daily chart and TradingView. We have a key level right here, which is 44.89. If it goes down to that level, it is probably going to smash through it. I doubt that it will, but let's see. But right now, this was the high point yesterday, and then here's this massive gap. And if we zoom in here, you could see that there's a big gap from this point to that point. Chances are it will go back up to fill this, but we got to wait and see. And this stock right now is just kind of moving crazy and slow. The high point, like I said, is around 78. Now there's another level up here, right, which is a little higher, which takes it up to 91. But I don't see it going up to that level anytime soon. So I would definitely watch for this gap here. If it breaks above 63.52, say 63.80. Let's just say that, 63.80. If it breaks above this level, chances are it's going to go back up to this 78. So you definitely want to watch between this price and the price up here. All right. Now, I want to show you guys an article. It's actually two articles. The first one's by Morgan Stanley, and then the second article also gives you some justification as to how they think it will go to the upside. All right. So first article here says Morgan Stanley lowers price target on Shopify to 80 from 85 and keeps an overweight rating. All right. So that's definitely not good when you hear Morgan Stanley saying something like this. That's definitely, not the best news. Shopify has an average investment rating of outperform among analysts polled by Capital IQ, with price targets ranging from 63 to 105. So pretty much amongst a poll of different analysts, they're saying anyway, it could go anywhere from 63 to 105. But let's go ahead now and look at the other article that kind of gives you some insight as to why they think it's going to go up based on previous history in terms of their prior investments. So this article, it's a new article, but it makes reference to the year 2022. So this article here says Shopify short-term margin pressure needed for long-term growth. All right. So they're saying this pullback is pretty much necessary. So we'll go here and we'll look, and it says Shopify's investments are going to eat into margins in the near term, but RBC Paul Traber says that these have historically paid off in future growth. Shopify slid nearly 19% on Wednesday, due in part to lower expected margins. But the analyst points to past investments such as its data and analytics-based marketing strategy in the third quarter of 2022. Since then, says the merchant additions increased, right? Merchants additions increased by 180%. So pretty much what he's saying here in a nutshell is that they made a huge investment in the third quarter of 2022 into some type of data and analytic-based marketing strategy, right? And it paid off. They end up signing up, the signups for merchants increase 180%. For those of you who don't know what Shopify is, it's pretty much an e-commerce platform that I would say almost every influencer uses. All right. So it allows you to sell like drop shipping items or make stores that are specific to one product. People who use like TikTok, Facebook marketing, they use this platform heavily. So they're saying that the investment that they made back in the third quarter increased merchant signups by 180%, and customer acquisition cost improved by 60%. So it not only got them signing up more people, but also acquiring more customers. The cost of that improved by 60%. We believe Shopify has a solid track record of realizing high returns on its investments, which may lead to growth reaccelerated through to 2025. All right. So pretty much they're saying you're going to have to wait. If I was going to play this, I would definitely look at leaps going towards that time frame, like they said, around 2025. Right now, the stock is a slow burner. It used to be fast. It used to be like 1, 2, 3, but now it's kind of moving slow. The fact that it just had this huge sell-off, that also means that large institutions, probably hedge funds, are like, man, I've had enough of this. You know what I'm saying? But also remember, whenever people like what Warren Buffett says, whenever people are fearful, that's when you want to buy, and when they are greedy, that's when you want to get out. So there might be some truth to this article. I searched a couple of different articles before I decided to do this video, and this was one that offered an alternative, to what's actually going on, shedding some type of positive light. But like I said, not near term, but in the future. This one's talking about seeing returns of the new investment that they did sometime in 2025. So if I was going to play this on options, I'd be looking at leaps on Shopify. All right. And that's it, guys. It's just a quick video. I just wanted to touch on that and explain to you guys exactly why the stock went down almost 20% yesterday. And as you guys can see, it is still down. So there's still blood in the streets. And, you guys know when there's blood in the streets, there's money to be made. All right. Thanks so much for watching this video, guys. I really do appreciate it. If you like videos like this, please consider subscribing. I make new videos every day, and I try to provide videos that give value. All right. Go ahead and like this video, share it with a family member or a friend. And also at the end of the video, you'll see 4 cards pop up with different videos. Please go ahead and click another card and watch another one of my videos. I really appreciate it. Stay safe, and y'all have a blessed day. Peace.